Now, the IMF will once again review the yuan's inclusion in its special drawing rights basket. The market has heard positive feedback about the yuan's readiness. The inclusion is likely to affirm the yuan as a potential global currency. But as a CCTV Xiao Chong finds out, inclusion is just part of the journey.
China is giving the yuan an extra push towards becoming an IMF reserve currency.
And we've seen a number of operations aiming at squeezing the shorts out of the CNH market. And now we're seeing some convergence of the offshore RMB exchange rate and onshore RMB exchange rate. So I think before the SDR inclusion, it's more likely than not that the RMB exchange rate would remain stable.
But will it shake up the global economy and currency markets?
Joining the SDR, the special drawing rights, is actually more symbolic than substantial. It's going to gain recognition from the global market that the IMF recognizes it as an international reserve, a currency.
We have a slowing economy, slower productivity growth, low inflation, easing monetary policy, and less exports, right? So that's why I think more likely than not, the RMB is going to depreciate slightly from here.
The big question is, what will be the yuan's weight in the SDR basket? It will be a key indicator of China's trade and financial power. And here comes the debate. On trading prowess, China would get a high share given that it is the world's largest exporter. But when you take out mainland to Hong Kong exports, the size of China's exports will shrink by 15%. As a reserve asset, China's share is well below even the Canadian and Australian dollars. The IMF estimates it's just around 1%.
And some people say it's going to take up 15%. I doubt it very much because, at the moment, RMB, the exchange rate is still married to the US dollar, right? So if you include something that is so highly correlated with the US dollar, then it means that the US dollar weighting on the portfolio is actually increased. And probably anywhere between 5 to 10% is probably more likely.
The new SDR will not be launched until September 2016, so it's unlikely to have an immediate impact on the yuan currency, but the long-term effect is foreseeable.
We're probably going to get some central bank buying of the Chinese yuan and also some of the Chinese government bonds after the inclusion. And so those benefits would come as time goes by.
Joining SDR will give the central bank more power. It will give the policymakers some confidence to make bolder moves.
And those bolder moves are what matters.
What I think is going to change is that the onshore and offshore rates should converge. In other words, the exchange rate in different markets and the interest rate should all be one, because once you integrate the market, then you don't have a segmented market. For monetary policy and others, I think it very much depends on flexibility of exchange rate and open up of the capital account. That's, I think, is still on the way.
Not every currency in the SDR has become a major reserve currency, like the Japanese yen. And for China, only the continued opening up of its financial markets and greater transparency would enhance the real value of the yuan.